What are the absolute best Justworks settings for startups, and how do you configure your account so you don't accidentally burn through cash, trigger costly state compliance fines, or mess up employee onboarding during early growth? When you first onboard your startup onto Justworks, you are handed a platform that centralizes payroll, tax withholdings, health benefits, and HR operations into one dashboard. But the default settings inside Justworks are designed for general small businesses, not necessarily fast-moving, multi-state, high-growth venture-backed startups. If you leave these settings at their default values or configure them incorrectly, you open your business up to massive administrative headaches down the line. Today, we are walking through the exact step-by-step framework to optimize your Justworks account settings from day one. The first major hurdle startups face in Justworks revolves around payroll frequency and worker classifications. When setting up payroll, Justworks gives you choices on pay schedules, typically semi-monthly or bi-weekly. Many founders default to semi-monthly because it aligns cleanly with two fixed calendar dates per month, like the 1st and the 15th. However, if you have non-exempt, hourly employees or workers in states with strict overtime calculation rules like California, semi-monthly pay schedules make calculating overtime periods complex and prone to compliance errors. Switching your pay frequency settings to bi-weekly aligns payroll directly with standard 7-day workweeks, making overtime tracking effortless. Along with pay frequency, contractor versus employee classification inside Justworks is a huge tripwire. Startups rely heavily on 1099 contractors in the early days to save on payroll taxes and benefits. Inside Justworks, when you set up a new worker profile, you must select whether they are a 1099 individual contractor, a vendor, or a W-2 employee. Setting up a core team member who works fixed hours under your direct control as a 1099 contractor just to save money on Justworks seat fees or payroll taxes is a massive risk. State labor boards heavily audit startups, and if you misclassify workers, Justworks cannot shield you from retroactive back taxes, interest, and unpaid benefit penalties. The second area where founders run into trouble is state tax registration and remote worker settings. In today's remote-first environment, hiring a team member in a new state takes just a few clicks inside Justworks. But the moment you assign an employee to a residence or work address in a new state, you create what is known as payroll nexus. While Justworks operates as a professional employer organization, or PO, and handles much of the state unemployment tax reporting under their master accounts in many jurisdictions, certain states still require your specific company entity to register for state withholding accounts or local tax accounts before payroll can be processed cleanly. The mistake most startups make is adding a remote employee's address inside the platform without checking the state tax registration tab under company settings first. If you fail to monitor these alerts, Justworks will put payments on hold or flag your account for missing state tax IDs, causing delayed paychecks and potential state filing penalties. The actionable fix here is simple. Before onboarding an out-of-state hire, check Justworks state-by-state compliance matrix, register for the required state tax IDs immediately, and input those registration numbers directly into your company settings. The third crucial configuration involves health insurance open enrollment, benefit contributions, and tiers. One of the primary reasons startups join Justworks is to access master PO health insurance plans from top-tier carriers like Aetna, Kaiser, or United Healthcare at large group rates. However, setting up your company contribution levels incorrectly can devour your runway. Inside the Benefits Settings tab, Justworks allows you to define how much the company pays toward employee health coverage versus what the employee pays out of pocket. A common default setup is contributing 100% of the employee-only premium for a base plan. But where founders get trapped is failing to set caps or tier rules when employees add dependents, spouses, or upgrade to platinum tier plans. If you set your contribution settings as a flat percentage across all tiers without a fixed dollar cap, your monthly benefits invoice will scale unpredictably as your team grows. Configure your benefits settings to offer a fixed dollar contribution or a fixed percentage tied specifically to a designated silver or gold base plan, requiring employees to pay the difference if they choose higher tier coverage or add family members. The fourth piece of the puzzle is permission roles and integration workflows. As a founder, you should not be the sole bottleneck approving every single expense reimbursement, time-off request, or contractor payment inside Justworks. Inside the Permissions and Settings tab, Justworks allows you to assign specific administrative roles. You can grant access to your external CPA, bookkeeper, or fractional CFO with accounting-level permissions so they can pull payroll reporting, run general ledger entries, and manage tax documents without giving them authority to change employee compensation or modify bank account settings. Similarly, delegate manager permissions to your department leads so they can approve PTO requests and manage timesheets for their direct reports directly through the Justworks time tracking integration. Finally, ensure your automated accounting integrations are linked correctly. Justworks connects directly with major cloud accounting tools like QuickBooks Online and Xero. The single biggest financial mess founders make is letting payroll data flow into their accounting software under a single, generic payroll expense account. Take 10 minutes inside the Justworks integration settings to map wages, employer taxes, health insurance contributions, and PO admin fees into separate, distinct chart of accounts lines. When your payroll syncs accurately every pay period, your financial reporting remains clean, investor-ready, and fully transparent without requiring hours of manual reconciliation at the end of every month. By optimizing these key settings right out of the gate, your startup can scale efficiently, stay compliant, and keep its focus where it belongs, building a great product and growing the business. With that said, thanks for watching and until next time.